Great. So we are at the point of adding other income, as we have determined our gross profit to be 8,000 Ghana cedis. Okay, so the other income, like I told you, the hint is that all the incomes have credit balances. Okay, so at the credit side is your income and liabilities, but you know we are not bringing liabilities here in the profit and loss account, so we need just the income. So even if you are confused, but you know that this particular thing is a liability, it gives you a clue that, okay, liabilities are not going here. So this should be an expense, an other income. Okay. So at the credit side, we see capital, we see sales, we see return outwards. These are not, we see discount received. So discount received. And that's 1,600. The next one is investment income. Investment income. Okay, that's 500. And then the next is creditors. That's a liability. Loan is a liability. Okay. So the other income, we have just two of them. So the total will be 2,100. If it's only one, as in if the other income is only just an item, you can straight away add it here. But if it is two or more, you add it at the second column, push the total at the third column, add it onto your gross profit, and that figure will be your total income. Okay. And finally, we move to getting your operating expenses. And professors, each and every one of you is going to give me an expense. So please, this time starting from the bottom to top, Prof. Ashley, what is your first expense?
Bad debt.
Okay, so Prof. Ashley brings in bad debt. The bad debt figure is 150. Okay, the next person is Frank.
Salaries.
Okay, so salaries. And the salaries 1,640. Great. The next person is Prof. Dameki.
Please carriage outwards.
Carriage outwards. So carriage outwards, that's 200. Let me check the figure. 200. Okay. Next is Prof. Aseye.
Please, wages.
Prof. Aseye, we've used the wages already in the trading account.
Motor expenses.
Motor expenses. Prof, why do you say wages though? Are you confused about something?
Yes, because
in
my textbook he gave me that wages is part of the, what do you call it?
Operating expense.
And then it's differentiated between the wages and the rent. So it came to state rent, and before they came to state their wages. So, but then I don't know.
So which textbook is that? Is it Terror series or any different book?
Please, is Bazok series.
Okay, so you know what? Screenshots that bit where it says wages is part of your operating expenses, but as your teacher, that's what I'm telling you, okay? When you see wages, as in like wages like this, it is part of the direct trading expense. So it is added to the cost of goods sold in the trading account like we have done. But if you see it like this, wages and salaries, if you see salaries attached to wages, then it doesn't go to the trading account. It comes to your profit and loss account. So this is the information your teacher I'm giving you, okay? I think if you have the Terror series, you can confirm that in the Terror series as well. Maybe the other book, it might be an error, okay? So if you are solving the question and you see wages and salaries, then that one, it will be part of your operating expense. But if you see only wages, please add it to your cost of goods sold in your trading account. Thank you very much. Okay, so motor expenses, Alexia, you give us your expense. Okay, Alexia types in the chat, discount allowed, okay. Discount allowed, that's 1,200. Okay, so if there are any outstanding expenses, please, well, let's go through together. So the expenses are the debit side. This is, okay, I see rent and rate. So let's go through. Drawings is no, balance sheet, purchases no, stock no, return outwards no. So return inwards no, carriage inwards no, carriage outwards we've sent that. Rent and rate. So rent and rate. Rent and rate. Put in that figure is 960. The next is advertising. Cost you incur for advertising your goods is an expense. Motor expenses, we have that one. Wages no, goes to the trading account. Discount allowed, we have it. Investment is an asset. Non-current asset, fixed asset. Depreciation. The depreciation is 1,900. Lighting and heating. Okay, lighting and heating, that is 550. Debtors, cash at bank, cash in hand, interest on loan. If you take a loan and you are paying interest on it, the interest on the loan is an expense. So take note of that. So interest on loan 1,000. Salaries, we've brought it. Bad debts, we've brought it. So these are the total or all the expenses that we have. So let's sum it up. Now we push under the total income. Please, if you are confused about a certain item, you feel that, oh, this should be part of the expenses, please let me know. So we sort it out. Or you feel there's an item that should not be part of the expenses. So professors, I think our income is greater than the expenses. So we are going to get a net profit. A net profit. Let's see how much. Yeah. So get a net profit of 1,640. Now end the trading and profit and loss account. Beautiful. Professors, any question up to this point? If there are no questions for me, shall we continue to the balance sheet? So you put your heading balance sheet at 31st March 2009. Okay, so you put in your 3 columns. The currency is Ghana cedi. So let me go and copy it. Okay, then as you know, we begin with our fixed assets. Right? You show the cost of the assets, depreciation, and net book value, NBV. Okay. Okay, so professors, let's pick the fixed assets from this trial balance. And who's going to assist us pick our fixed assets? If you are ready, you can put up your hand. I call you and you share. Fixed assets. Yes, professors. Your trial balance is looking right at you. What are the fixed assets here? Okay, so professors, where is our fixed asset, please? Where is it? Yes. Oh, no idea. Okay, let me. Prof. Sandra. The investment. Okay, so the investment is one. Thank you. What other fixed asset do we have? Okay, so if you go through, right, the first thing you see here, non-current assets, and I told you that's the same as fixed asset, right? So you are not seeing your building purchases, fixtures, furniture, etc. But you see non-current assets, right? So those are also fixed assets. So non-current assets. I think what they did here was to sum up all the assets that the business has, the tangible ones, right, into non-current asset, which is the same as fixed asset. So don't let it confuse you. So non-current asset, but look at something here. It says into bracket less depreciation. So this 19,000, they are saying they have less depreciation. Okay, so they have less depreciation, and this is the final figure they got. So that should suggest you that the 19,000 is the net book value. Okay, it's not the cost, because they are saying non-current assets less depreciation. So it means they have already deducted the depreciation from it. Okay. Then as Prof. Sandra said, the investment, which is also given as 8,000 Ghana cedis. Okay. Please, you understand a bit about what I spoke on the less depreciation. So you see non-current asset into bracket less so this figure is less depreciation, meaning that they have already deducted the depreciation from it, right? Well, if we go through the question, the depreciation was 1,900, right? So it simply means that the cost of the asset was actually 20,900, and then they deducted the depreciation of 1,900 to arrive at the 19,000 net book value. Okay, so you can also present it this way if you want to show the cost, the depreciation, and net book value. But if you don't want to stress yourself, the question has given you a simple, straightforward item. These are your fixed assets. It has been less depreciation. In other words, depreciation has been less from it. So you put it straight away as your net book value. Okay. So let's move on. So these are the only two fixed assets that we have. Let's get a total. So total fixed assets. That'll be 27,000. Good. After your fixed asset, you move to your current assets. And I think last time we went through the current assets. Professors, can you assist me do the current assets? Because of our time, I would expect quicker responses. Okay, Ashley.
Stock.
Thank you very much. That's the closing stock. So stock. Okay, and that is 3,800. After that, what next?
Debtors.
Debtors, thank you. Debtors. And the debtors figure is also 3,800. What next? I think okay, Ashley again.
Cash at bank.
Okay, so we have our cash at bank, as in the money in the bank, which is 2,000. And then I think the cash in hand. I think you both or you skipped something, all of us. That was the prepaid expenses and accrued income. Please, they are part of your current asset. So when you are listing your current asset, don't forget them. Remember them, but only check the question if you have them. So yes, we don't have them here. Probably that's why none of us mentioned it, right? Okay, but some questions they are going to be there. Actually, those things come in the additional information or adjustment. So I think that's all for our current assets. So we sum it up to get our total assets. And after that, we move on to the current liabilities. So we less the current liabilities. So current liabilities, we also went through that. Creditors, bank overdraft, expenses owing, and income prepaid. I think we have creditors in this question. Creditors figure is 2,150. Apart from the creditors, I'm not sure we have any other liability, right? As in current liability. The loan is a long term. This is an income, this is an income, return out or trading issues. Okay. So the creditors is the only current liability. Please, If it is only one item, move it straight away under the current asset to less. But if it's two or more, you list them as the first column and then the total will come under the current asset. Here is only the credited, so we put 2,150, and then we less it to get the working capital. So working, that'll be your total current assets minus your total liabilities, and we have 8,140. So we add the working capital to the total fixed assets. And I told you the figure you get is called net total assets. And that's going to be 35,140. Is any question? Then we now move to the financed by column, finance by. And as you all know, that section begins with a capital. Then we have the capital of 25,000. When you bring the capital, you do two things to it. You less drawings and you add the net profit. So let's see. There's drawings of 1,500, and we also had a net profit from our profit and loss account. So we less drawings, 1,500, then we add the net profit. The net profit we had 1,640. So always remember, when you bring your capital, you less drawings, you add your net profit. Okay. Then the last thing will be your long-term liability. Long-term liability. And I told you your long-term liabilities is the loan. Okay, that's loan. The loan is 10,000. So you add your long-term liability to your capital, and then that will be 25,140 plus 10,000, giving us 35,140. And I said that is the capital employed. And it should always be equal to your net total assets. In this case, they are equal. So our balance sheet has balanced, or it has agreed. If it doesn't agree, it means there's an error somewhere, and you have to, most of the times, go back to check it. But professors, under exams conditions, if you finish and you don't have time, don't stress yourself going back to fish out the error. Especially if you are confident that you've done all the necessary things you have to do. Okay. Any question, professors? No question again.